Good morning, everybody. I hope you had yourself a fantastic 4th of July. In this week's video, I want to take a look at the S&P 500 on a short-term basis as we took a look at it on a longer-term basis in last week's video. And I also want to take a look at the Gold Bug Index, which is not something we've taken a look at thus far, but there is some interesting setup if we take a look on a longer time frame in that sector. With these videos, my goal is to do a couple of things for you guys. Number one, take a look at important areas in the overall market. But number two, teach you guys how I kind of look at the market, some technical analysis components. So you're going to see me draw things like Darvis boxes, use Fibonacci, retracements and extensions in order to get price targets. Also use moving averages, RSI, MACD. And as we go through these videos week by week, these different concepts should hopefully stick and will make you ultimately a better technician moving forward. So when I take a look at an index like the S&P 500 here, I want to take a look at where the long-term trend is. And currently, if we take a look at this over the last year, we can see that the trend is subsequently higher. Then we break this down and we take a look at a shorter time frame in the last 6 months, and we can see we really haven't gone anywhere during that time frame. This is the box that we talked about last week. We have an uptrend and we also have a downtrend, so we've got a little bit of a wedge inside a box. So really we're waiting to see if we can get back up to this area in the chart and try to make an attempt at breaking out to a new high, or are we going to get back in this area of the chart and make an attempt at breaking down to a new low? And while we're stuck kind of in the middle of this range, it's usually best to just kind of sit on the sidelines, not make a play, and ultimately wait for the market to tell us which direction to take. It's better to wait for confirmation than it is to guess in terms of where the next direction is going to be. We'll ultimately let the charts and the market tell us what it wants to do. Now, when we look at this on a shorter time frame, I'm going to take a look now, and these are hourly candles. We can see a very important level, and this goes back a couple of months, and that's really right here at this 2680 to 2700 zone on the S&P 500. This is, let me draw this actually as a box so that it's nice and clean for you guys here on this chart. This is what we call an area of support at this point in time. If we go back a couple of weeks, we bounced up into this zone and it acted as resistance. So when we came up into this zone, price was rejected and we fell back underneath of it. And we made that attempt again and we kind of traded right around in that zone. Then we broke above it. And now when we're trading above an area of what was resistance, oftentimes it then acts as support. So you can see us holding this zone and maybe we get this next move here to the upside. So when we look at this over the last couple of weeks, the important zone that we were paying attention to is this box right here. We have a short-term downtrend into this range, and we have tested the bottom and the top a number of times. And so what we're looking for as technicians, and what we should be looking for, is a break above this box. That would give us a short-term entry on the long side, or we look for a break underneath of this box, and that would give us a short-term entry on the short side. But inside this range, we don't really want to do anything, especially in the middle of the range. That's the worst possible spot we can play. If we're looking at the top of the range, this would be a spot where you could short it if you think it's going to stay in the range. And at the bottom of the range would be an area where you could buy it, looking for a move back to the top of the range. Some people like to play these ranges. I personally prefer waiting for a confirmation in terms of direction for the next move. And so if you're looking at this, this box right here is very, very clean, and it's a very simple technical setup. So once again, we're looking for a move over it for an entry on the long side, and a move underneath of it for an entry on the short side. Now, let's take a look at the Gold Bug Index. This is not something we've talked a lot about in the last couple of years, because the gold market has essentially been stagnant since that big pop at the beginning of 2016. Now, this is a monthly chart that we're taking a look at here. And what we can see is we can see a very clear box setup over the last 5 or 6 years. All right, so a move above this would give us a long entry. A move below this would give us a short entry. Now, we're trading in the middle of this box, but we are trading in such a tiny range at this point in time. The last year is in this tiny, tiny zone. When we get prices to compress in such a small range like this, we typically tend to have a large move at some point in the future in either direction. And the last time we saw a really, really tight range for about a year was right here. And you can see in this particular example, we got a breakdown and then we got a large move. This is a 50% move to the downside off of this range. So I don't think there is a play in this space at the moment. But this tight compression zone should have everybody paying attention if we do make a break to the upside or if we make a break to the downside. This would definitely be an area where we would have an actionable setup if we were to break out of that range. So it's a short video this week because it was a shortened trading week with the holiday. Again, I hope you guys had yourself a fantastic 4th of July, and I will see you guys next week. Enjoy the weekend. Take